Good afternoon, LT. How's everybody doing?
Hey there, young man. How you doing?
Pretty good, pretty good.
How was your day?
My day is always good.
That's what I'm talking about. As long as you breathing, huh? As long as you're
That's what
above
I'm
ground.
talking about. The rest of them we'll deal with.
Yes, indeed. Yes, indeed. What you got accomplished today?
Talk to me. Say what you say again now.
What you got accomplished today?
Actually, I'm trying to turn my house into Airbnb, so I came in and finished up this bathroom I'm doing, painting some bathrooms, putting mirrors in, installing new lights, and putting down new flooring. So I'm trying to get it ready so I can make some money.
Try to get it ready so you can make more money.
That's what I'm saying. Well, you know how it is. You know how it is. You can't say everything online. So.
Words mean things.
Can't say everything online. Too many ears are listening.
Look at it. That's what it's for. It's for to encourage them to get it too. They need to get it. They need to understand. Oh no, he ain't making some. He making more. Okay, then you know what? I just need to make some. I need to take one step.
That's it. So I got got my guy over here working, doing some things. So it'll be all right.
And he was over there last week working.
Oh yeah, we were doing another house last week. We finished up that. We're doing a whole plumbing job. So I called myself trying to do some studying over there while he's doing the plumbing, but it looked like to me I had to come in and help him a little bit, hold his hand a little bit, but it'd be all right.
Hey, look, that's how you save money right there. I helped you, so I can't pay you full price.
Yeah. But look, what he charging you? If I told you what he charging for this whole,
you told me.
So I mean,
we talked about it.
Yeah. I'm just saying, hey, it's not bad. So
nah, you good. You winning.
That's not winning. So that's it. All right, I'm going out. I'll be right back.
Take care. Hold on. Yeah, I got you. All right, guys. We just pretty much letting folks come on. It's 9:02 on my clock right there. We got a treat for you tonight, and I want more people to go in and join before we go off on there. But if you got something you want to talk about, hey Vincent, what you got going on, brother? What kind of business deals you got going on right now?
Imagine right now, the lady I got a house from, a subject to house, and she passed. So I'm in the process of getting all that paperwork switched over so I can move forward. I'm like, wow.
Hold on, man. Now you can't slide by that one now. Okay, look, I got to learn from you right now, man. This is not an opportunity I'm willing to miss. So you have a subject to deal contract on the table right now. And the young lady, I'm gonna say she's young. I hope she wasn't too young. And she's done passed, and now you are waiting for paperwork to be what's the word? On the probate paperwork.
Well, it's already been done. I already got the house, but when you do subject to, the insurance part is still in her name. So anything to deal with the house, it got to go through her. But she's not here, so the next person is her son. So, but she passed about 30 days ago. I've been trying to contact them, and I haven't heard anything back. So yes. I'm just trying to get a hold of to him. So hey, I can put me on the. I can take care of the insurance and anything else. You know what I'm saying? Because the deed gonna come to me when I'm paying for it. Yeah.
So okay, what did you learn from this right here? What did you learn from this?
Well, I think I should have been a power attorney up front. You know what I'm saying? Then I've been okay if something like this happened. If I was adding me, right.
And you can make yourself additionally insured and on an insurance policy too, right?
No, I didn't know anything about that.
All right. Did you know that? Did you have the deed in your name, or did you keep the deed in her name?
Well, the deed come to me when it's paid off because I went through a title company.
Okay. You went through a title company to do that subject to. Okay.
Right.
Okay. Well, for one, I'm looking at what else we can learn from that, because right now that's an opportunity that everybody on this call got a chance to gain gain an understanding about, hey, look, I did a substitute deal and a lady passed. Now, what's next? I mean, that makes a whole bunch of things happen. Probation. I forgot the name called when I think it's probate. When you have to go and change the name from the owners to the kids, and then they can sell a house. I forgot the term.
Yeah, that's probate. That's probate.
I thought it was some other term when you actually go into the lawyer. I know that's probate when they pass, but I'm trying to figure out what's it called when you get the paperwork over to the other people's name. I can't think of the name of it. If you say it, I know that's what I'm thinking about, and maybe I'll be thinking about something else. But nonetheless, it's a couple things.
Yeah, I'm sure they got a time frame anyway, because anytime you have anything with insurance to do with it, trust me, insurance they back to property. So if I didn't send payments to her, you know what I'm saying? So if they ain't received a payment, they probably looking crazy right about now. See what I'm saying?
Well, you lucky anyway. We got an insurance person talking tonight. So you and look. So you in good shape. And at the end of the day, man, this show you how things fall into place, right? The conversation we having just right now, and we have an insurance person that does this on a daily basis talking, and this was not staged. It just so happened. So good deal, man. Good deal on that part. That's the first thing you said, the insurance, but it's so much more. Okay, well, cool beans, man. You definitely got to keep me informed on how that goes out so that I can learn with you on that one.
Right, absolutely.
And then we can make that a winning situation where we present it to everyone for real at the end of the day. I don't know who hand is up.
Hey, that's my hand up, man.
Man, why your name ain't popping up? You nobody today?
Hey, man, look. I don't know what's going on today, man. Hey, all I know is I hit jackpot. That's all I know. I'm at my house, a property that I closed out on last week. Received the documents FedEx today. So, hey, I got the green light today. So I leave the house. I'm in this black truck, windows tinted out. And I say, you know what? Hey, let me creep the block really quick. So as I'm driving, really nice neighborhood. I'm driving, boom, run up on one. Okay, cool. Pop it in my phone, out of state owner. Okay, cool. Let me keep driving before I start making my phone calls. Boom, pop up on another one, out of state owner. I'm talking about these are ready to go properties. Move in ready. Skip trace them, got conference calls with them tomorrow. So I'm talking closing out 2 more deals, same neighborhood, from people who have just abandoned their properties, no longer want them. So hey, I'm feeling good. So hey, I'll be a nobody today. You know, hey, I'll be a nobody today. But I mean, this is just how things take place in this industry. Hey, LT, can you do me a favor? Ask those, hey, everyone, please put into the chat line if you want to learn how to flip houses, you want to learn how to be a landlord, you want rental properties, or if you want to wholesale. So put that in the chat line, which one of those 3 that you guys are actually looking, to actually do, is going to help me, as well as LT, for us to make sure that we're, speaking your language. And we're able to, give you guys good, tangible plans that you can actually follow to help you be successful. Everyone is not here to do creative financing like I do in rental properties. Some people just want to flip, and some people just want to invest, and some people want to wholesale. So we want to make sure that we're touching as many as we possibly can. And with that, hey, I'm super excited about tonight, learning how people are purchasing properties utilizing their insurance. So because right now, I know I'm way out in left field right now, LT. I have like a $2 million insurance policy. If I can purchase property with my $2 million insurance policy, man, I better not tell my wife, she might just push me off the bridge. But I really want to know. I'm fired up for tonight.
Well, you're on YouTube. You just told your wife.
Oh, well, hey, she don't subscribe to your channel. She don't like us like that.
Well, That's a story for another day.
She just, hey, long as the check clears, that's all she cares.
Hey man, that's a story for another day. We got all these women on the call. We need some counseling. Why do women that we marry and that we with don't support?
Hey boy, hey, no, hey, look, she support. Hey, you need to go drop that check off. I'll drive this time. I'll drive this time.
That's what I'm talking about. That's what's up. Nah, man, that's good business, y'all. And Joe's not pulling y'all leg on that one, y'all. I was on the phone with him as he was driving in the Shreveport, and he rolled up and he was driving for dollars over the course of time. And then afterwards, he had a yard and he cut. He saw guys cutting yards. And he said, "Hey, man, you cutting a yard? Yeah, I got another yard to cut. Hey, you want to follow me around the corner? I got another yard for y'all to cut." And changed numbers, and the man followed him, and he said, "Well, now you can go. I'm gonna give you the address, and I'm gonna keep driving for dollars. I'm working." So that's why he got jackpot. He's on the prowl. He's moving around. He's trying to do what he got to do, and at the same time, he's hungry. He's hungry. Every opportunity out there, he's taking advantage of it. So thank you for sharing that with us, man, and congrats on that that absentees owners fortune, that jackpot, right? But look, it's what time it is? 9:11. So we got a treat for you tonight, right? We have a young lady that's from Georgia that has started and been working in a while in an insurance company. She joined our call about at least 3 weeks ago. I want to say minimum 3 weeks ago. And since that time, she has found value in this call. And she said, you know what? She would love to provide value. Me and her like to teach others. We want to be, a tool to be used to inspire others. And when we had a private conversation, she said, look, I have no issue with whatever I can do to make someone else better. And if I can help them get started, that's her goal. That's her goal. So this call is not about just only real estate, right? It's about masterminding and giving people opportunity to hear what can be done from people that are actually doing it, right? And after they do that, if I can make it real estate, Joe can make it real estate. Anybody that loves real estate like us, whatever you saying sound like real estate, right? If you're talking anything dealing with money and exchange, you're talking real estate to me, right? So I'm going to always make it relate to real estate. And when I teach it to someone, I can teach it real estate. So that's the goal. And that's what we got going on right now. And this young lady gonna come at you and talk to you how you can do certain things with insurance policies that you can capitalize and benefit on now instead of waiting till you pass and you never benefit from it and your family only one benefit from it. So we're looking forward to it. I got my notebook with a name already on it ready. I told her I'm gonna have my notebook ready. Thank you so much, Miss Cynthia Scott. Tonight I'm gonna go off. I'm gonna come on and off maybe just to help out to screen things on, or ask the question that's maybe a dumb question, quote unquote, no such thing, but I ask the question and maybe generate a thought-provoking moment that I think you all may want to hear when she give a big gem, or I may echo some things. So nothing else said on my end. Here's a young lady that's willing to give y'all her love, her guidance, her some support to you to help you get started and give you another avenue for money to be used now instead of later. And that's, I just made up some now, later. But take care. Thank you, ma'am. I'm going to mute.
Okay, thank you. And just to let you, am I echoing? Okay. All righty. So just to let you guys know that, even though it's been just a few weeks that I've been joining.
You're muted.
Okay. All right. Did you hear anything? Okay. All righty. So I'll start over. So just wanted to, thank you guys for having this platform. And, even though I am an investor, I have learned a lot from you guys in a few weeks. So I want to give you just a little bit of what it is that I do. But I will take you back just a little bit. As Williams mentioned, I am a teacher, I think by nature. But tonight we're going to discuss the traditional banking system and how we can duplicate that same model so that we can start our own bank. Okay, so some of you may be familiar with this information. I actually heard one guy, a snip of it last week when Mr. Jones was talking, and he asked a question about what would a person do with X amount of money. So I can tell that that gentleman, I'm not sure if he's on here, he either does it, heard of it, or familiar with it. But I do hope that all of you have not heard about this, so that I don't bore you, okay? So we'll start out with, when you start a bank in the United States, it takes about $500 to $1 million in order to start a bank. You're going to need a group of experienced bankers so that you all can pass the FBI background check. And finally, you will need to show that you have at least 10 to 30 million in capital to get the bank underway. Okay. So a lot of us are not rolling in that amount of money yet. But there is still a way that you can start your own bank. Matter of fact, that's what my BYOB is be your own bank. And so how do you become your own banker? So we're going to use the model that the banks use. And, you know, this is something that I teach to my clients so that they can prepare for a better bank solution, retirement, or prepare for investment opportunities. So what we will learn is another creative financing avenue. Okay, so while keeping more of our cash flowing back to us instead of the banks. So we all have heard of don't reinvent the wheel. Okay, so this applies to just about anything. I do believe some things may need oiling and tweaked, but even when it comes to banking, we're not going to reinvent the wheel. It's already in operation. It's already going well. So we're just going to model that. Now, when we think about banking, what is our typical banking starting order? I'll go by what I've heard and what I've seen in my community. You know, by the age of 13 is when most parents get to thinking about introducing their children to banking. Now, I didn't do that at 13. My mother didn't do that at 13. Eventually, I got a checking account, but, you know, this is the typical time. So what they say is that every teen should experience opening a checking or savings account, and that opening an account is as early as age 13 or when they get their first job would help them start becoming a more responsible teenager. And after that, it's working age. This is the other time that most of us will start a bank account. So now, how does the system work? Well, you know, we work 9 to 5, you know, and I'm being a little modest here because, you know, a lot of us work much more hours than that. I know I do. But let's just make it basic. We work 9 to 5, Monday through Friday. Friday is payday. And we have a checking account. You know, we make deposits in that checking account manually. Some of us use the handy dandy direct deposit. You know, and Monday, we start it all over again. So one thing that I do want you to remember, or if you don't remember to pay yourself first, I'm just going to say that. We'll come back to that. But remember to pay yourself first. So we're the ones that's working all week. Now, we should always be in a position to pay ourselves first, always. So why should we do all the work and everyone else gets paid except us? So we make deposits into our checking and savings account. Now, in our checking account, you know, we use it for operation, whether it's your home expenses or if it's a business account, use it for to operate your business. Now, what do we do with the rest? Okay, this is, you know, the checking and banking that we normally do. This is a revolving storage, money in and money out. Okay, and if we put it in our savings account, so say for a rainy day, you know, which is what we've been taught to do, what happens? What happens to our monies as we let them sit in the savings account, particularly? Well, you know, it's a secure place, but the rate of return is not that great for us. It is for the banks, but not for us. So while it's just sitting there, it's not being used. It's not being used at all. Now, if we think about it, what we're doing is really giving the banks unsecured loans every time we make deposits or savings every week. We're giving them unsecured loans. Okay. We're not asking them for collateral. We're not asking them for anything, but just hold my money. That's what we're asking them. So what does the bank really do with our money? That we're so happy with saving. Well, they invest it. Okay. So, one way is they offer loans. We know that, we've all, I'm sure, has had a loan from the bank, with higher interest rate than we definitely want sometime, but because of your credit worthiness, that's what you get. So they invest our money in different things, and even in insurance. Believe it or not, banks invest in insurance. That is one of their number one things, or investments, or, well, you really can't call it an investment, but that's one of the tools that they use to store money. Okay. So, when I think about savings accounts, I think about, we just keep our money there and it's not moving, and this reminds me of something my truck drivers, they say it all the time. If the truck is down, they say, Miss Cynthia, not making any money. Why? Because that truck is not moving. So that's even when it comes to our money. Money is no value sitting in a savings account and we getting peanuts at the end of the year. So we have to keep that money moving. So we want to be creative in when we're doing those things. So we've gotten a checking account at age 13. Let's just start there. Now you need a loan. So what's the process? Well, first of all, you got to get a loan application. Then you're going to have to, along with that application, there's a credit check. Okay. You may need a cosigner, higher interest rates, approve or decline. Those are the only two options. Now, let's talk about the approval part. Now, we're happy to get approved for this investment. That's what we're talking about here today. So we're going to use just an investment loan. So, so now you can acquire the property with a 5.667% interest and everything else that's included in that finance agreement. So now you have a loan payment of $500 per month. We're just keeping it simple for math. $200 going to the principal, $300 going to where? Interest. And this goes on for 10, 15, could be 20 years, whatever the terms are. So granted, if we do have a tenant, which what we most are all doing here, the tenant, if you work in the system right, the tenant is making that mortgage, making that loan back, and that's good. Okay. At least it's not coming out of your pocket. But what if you had your own bank that you can put all the money back? Okay. So many consumers does not get approved for a loan at a bank that they have been banking for as long as age 13. That some of them still get declined. Some of them get declined and you to make deposits into this bank every month, every week, direct deposit. You put $1,000 in every week or $2,000, whatever your pay is, and you can't even get a $500 loan from them. Okay, nothing against the banks. Okay, but that's just the process. That's just the nature of it. So the process, what does it look like when you get declined? Okay, are you still going to be able to get the deal done? You maybe ask some family, find a group of investors and work with them. That may work. Or do you try to, maybe later get your credit better and come back later? So how do we duplicate the system so that we can become our own banker? So that you can keep all the cash flowing back to you, reuse it, start another bank. Heck, you can start 2, 3, or 4 banks if you like. And all of this is done without having to have $1 million, okay? So here is what I do. And this is what I teach. I teach it to my truck drivers. I teach it to my young 25 and on up, you know, that 25 to 40 age range, you know, or late 30s, they eat this information up. I share it with them so that they can be empowered. And, you know, and one of the things that we find so hard is starting a business. Okay, so we want to keep control of our money. That's the main thing. You know, I'm not a stock person. You know, I have a few coins and some Bitcoin and another area, but I'm not a stock person because I can't control it. Okay, it's too volatile for me. But in this atmosphere here, we can control our money, keep it flowing back to us once you learn the system. So I do teach a method using a properly designed dividend paying whole life insurance policy through a mutual life insurance company. Now, we won't get into the design of the policy, but I want you to just focus on the concept and the function of it. Okay, so we teach the infinite banking. You may have heard it. Be your own banker, banking on yourself concept. You know, it's not a new thing. It's been around for more than a century. Now, I can't take this. I can't take the logo. I have it on my T-shirt that I printed myself. But, you know, this is very infamous from Nelson Nash. If any of you heard of him, I suggest look him up. You can gain even more information on this concept. But we take the same deposits, okay? This is what we teach. And this works very well for a person who already have a savings account, okay? Why? I think that a person that has a savings account already is someone that already has some discipline in place, because it takes discipline. It takes a mind shift to think that I'm not gonna put my money into the bank every month and or divide it. You know, sometimes you have to ease stuff on people. So if you're just used to putting $400 and you mean to tell me I need to put it over here, yes, that's what I'm saying. If you have that savings account, you are over halfway over the hump than others, because someone that doesn't have a savings account, my opinion and what I see, they're not on a path of prioritizing. That's just, you know, unless they're keeping it on their mattress, okay, or something, and that's fine. You know, you can keep it on your mattress. But what I'm saying is an actual model that you are setting aside, that you are paying yourself. Most people will save and they think I just have a savings account, but that's a good method, my opinion. I mean, you're not even calling it that, but really, I think I would probably say that's what you call it. You're paying yourself, you know, but we just so tradition that we just say, well, I'm just put it in my savings account. But we want to talk about how do you deposit those same funds into your life insurance policy, okay? And it has to be a special design. It can't be the traditional whole life policy. It's not going to work. And if any of you know about life insurance, we all know that whole life insurance by design gains cash. We know that. Term does not. We know that whole life does. So with that, there are features, there are add-ons that we will have to add to the policy in order to make the function even I'll say on steroids, really. Okay, so it has to be designed correctly. So I mentioned that this is not something, new. It may be new to some of us, and I've been in the insurance industry for 15 years, independent agent. And when I first started, I did not know this. I didn't know it. But I do now, and this is something that I use. But just to let you know how old this is, maybe not the name, but the concept has been there. We all are familiar with John McCain. John McCain funded his political campaign using the cash out of his whole life policy. Walt Disney borrowed money from his life insurance policy back in 1950 something to help fund Disneyland. Now, he did this because the bankers didn't want to take a chance on him. Okay. And can we imagine today, Magic Kingdom not even existing? But he had a well-funded whole life insurance policy, and he did it. So he used his own personal bank to make it work. Walt Disney even said that he could never convince the financiers that Disneyland was feasible because the dreams, that we have, they have little collateral. So even when we go into the banks and we come with this brand idea, I want a duplex, I want to have an investment property, I have something, it's depending on what it is and your relationship with them, they're not taking dreams. And that's something that I think about often when I, learned what Walt did. So he acted as his own personal bank. Okay. Now, this sometimes happens, like I said, in real estate and investors, when the banks just won't give us a break. Now we all know James Cash, JCPenney, same thing. During the Great Depression, he used his whole life insurance to bring JCPenney back. Okay. So even as business owners and investors and individuals, the strategy that you use to build your whole life insurance policy, people use it to start a business, to grow the business, to save the business, okay? Pay salaries. This is what Mr. Kroc did, Ray Kroc, that's what he did. He paid 2 of his key employees along the way through his whole life insurance policy, a specific design policy. So the business owners, they run their expenses through here. So just to give you, without going too far into the policy, but I want you to take this away. I want you to, again, think about if you have a whole life insurance policy that already gains cash by design, you have an opportunity to add riders that would allow you to overfund the life insurance or to do a dump into the life insurance policy every year or monthly. You can, if you're dump, we have people that they dump $10,000 into their whole life policy annually. Okay. They either do it annually or they do it monthly. Okay. But this is their amount that they have set, depending on how the policy is designed, you have to have enough insurance there so that window can open up so that you can do those dumps in the policy. So once you have put the funds into the policy, the cash is available, okay? And you would see about maybe 95% of that cash being available. Why? Why not 100%? Because you have to pay for the cost of the rider, okay? But you want to do that in a set time that you do that is about 7 years. That's when we design them. You could go longer, but that's 7 years, because don't forget, well, if you don't know, we have to be careful about how much we do put into these policies, because the IRS watches them so that you do not mech out. It's so that it does not look like it's an investment. But as long as you have your base amount of coverage, and then you add on the riders, that opens up. When I say open up, it gives you more insurance for a limit of time of years. And that window, that opening is what allows you to overfund into that life insurance policy with the riders. Paid up additions rider is what it's called. And you can, like I said, dump it in there. Personally, I do it annually because I don't do the month-to-month thing in there. I like to dump it in so that I can access it. Okay. So again, once the funds are there, I may make this sound a little easy, but everybody knows that life insurance is, you have to go through underwriting. Okay. So it does depend on your health, your age, and some other things, what basic life insurance depends on for an approval. Now, I will throw this out there to you. If you like the concept and would rather put your money over into something that you can control, where they're not telling you can't get this amount, or you can't take a $500 out a month, a day, controlling your money. Okay. I just try really to eliminate as much money as I can flowing through the bank, just enough to pay for my overhead. Okay. But you do, but let's go back to the underwriting. You have to get approved, but the nugget is this. I know people who catches the concept and is uninsurable due to health. So what do? You can actually, if you have an insurable interest, you can actually do it on a child. Okay, a dependent of yours. The bank is the bank. Okay, it's the family's bank. So you can do it on a child and run it through there the same way. Have one on my daughter. Okay, but at the same time, I'm teaching her the method and the concept that is behind it. So with this, you can operate your business, you can start a business, you can save your business, okay, and still have access. So what you do, you would take a loan out, okay, against your life insurance policy. But here's the thing. When you take the loan out, well, I ask this question. If you were to take the money out of your savings account, if you have $1,000 in your savings account and you take that money out of your savings account, what happens to the growth? It stops. If you have a perfectly or specifically designed life insurance policy, if you were to take $1,000 out and you took that loan out, as long as you're dealing with the unrecognition insurance company, they will treat your money as if it never left. So what bank does that? Still going to give you dividends, still going to give you compound interest if you take the money out. Now, I don't know a bank that does that. My bank does, but I don't bank with one here in town that does that. So again, that's another thing that you have advantage of. Okay. So if you take the money out, you still have your money is steady growing. Now, when you look at these policies, you want to make sure that you're dealing with a mutual company. A mutual company is in partnership with the policy holder. So that means that I have stake into the insurance company. Okay, so you're going to have you're going to have two types of companies. You're going to have your mutual company and you're going to have your stock companies. So your mutual companies, they pay you first. Okay, they give to you first. They don't do us like the bank does. The bank give us what is left, what I feel like. Okay, so if they made $5 off our money, they give us 1 or 50 cents and they keep the other 4.50. Okay, but what you do is you can have that as your I'm sorry, I lost my train there. But you can use that for your method of banking. When you take the loans out, it is a loan. You're going to pay interest back. Well, guess what? You're going to pay interest back to the bank. So the same method we talked about earlier is you have a tenant in there. The tenant is paying the mortgage back to the traditional bank. Well, the same thing here. If you have enough cash to purchase that property in your life insurance policy, the same method. Well, now who's getting paid back? You're keeping that cash flowing back to you. Okay. Even if the person is paying a traditional bank back for you, if your mortgage $500 and you charging them $1,000 for rent, well, yeah, we like to say, well, they're paying it, but really, whatever comes in, because it comes to you first, you want to keep as much of that as possible. Okay, so what you do is you can be creative in your design whole life dividend paying whole life policy. Now, we all know that dividends are not guaranteed, but some of the companies that we deal with, they have been paying dividends for over 165 plus years. Okay, they're 170 and 80 years old. So that lets you know these companies have withstand sometimes the depression, some what we're dealing out, some pandemics, all of this. Okay, so the design is, that would take more of a study time in an individual base, but designing that policy where that you can have access to that cash and use it, repay it back, structure it, just like you would the bank. So now I am a banker. Okay. So when I withdraw, I amortize, and I said, okay, so this is how we're going to pay this back. The same thing, the same way you would do bank of whatever, you do the same thing for your bank. And if any of you take on this concept, be a good banker. Okay, pay it back, because when you pay it back, you want to be able to reuse it. Okay, that's the point. So your cash is flowing, you're paying it back, reuse it back again. And it's not just for investments. This can be used for that child's first vehicle. If you have taught them well and they understand that nothing is free, and you want to show them some responsibility and they want to work, or you have them working for you in your business, well, you have a car note to make. We're going to take the loan. We're not going to uptown to the bank. We're going to our bank. We're going to the family's bank. And this is where we're going to get this loan from. And that is going to transition the mind of banking for our children, for our future. Okay. So the steps to the process is first of all, we have to have our personal finances in order. Okay. Because this is a process, again, the mind change, is for most people, is thinking, because I have a question that I ask people, which is, when you think about life insurance, Do you think about life or do you think about death? And I follow up with, the way that you answer that question is going to pretty much tell me how your policy is designed. I do not think about death when I think about life insurance for myself. I do not. The death benefit is going to be there if you have insurance. So why not have it to work while you are living? These are part of your living benefits. So a lot of people, when you talk about life insurance, they talk about death. I'm not leaving someone something to spend, or I'm not going to do this. But ask the question, how can I use this while I am living? What are my living benefits? And one of them in a whole life insurance policy is the cash. And we're going to use it. And here's another thing. When you put the cash in there, don't just let it sit. There is a reason. I'll take that back. Unless your plan is for something else. Because you can have the same type of policy that you are overfunding and use it for retirement. Okay? You can use it for different things. So I'm just thinking about investing right now, but you can use it as part of your retirement vehicle to supplement your income, with whatever else you may have prepared for that time. But if you're using it in this method, you don't want to let it sit, because what? The money is not moving unless you have a different plan for the future. Okay. So again, sitting there is not doing anything. Now, mind you, the insurance company is using your money. Okay. So we're doing what they do. Okay. So what good is it for us to have $10,000 in a savings account, $10,000 in a checkings account, and allowing the bank to use it? We have a better way, or we have another way. Okay. Now, after you get your finances in order, first thing, and you pay yourself first, remember to do that, because first of all, you're the one that has done all the work. Okay. And then we can show you how to use those same deposits again to put into your bank to make those deposits into your dividend paying whole life insurance policy, your storage facility. Because really that's all the bank is. It's a storage unit. Okay. So we in and out, or we sit it there. That's what it is. But there is another way that we can secure our monies that's not even connected to the market. So all this volatility of the market, like I mentioned before, no matter how the market does, it's not going to affect your insurance policy. Okay. So from there, you will learn that. And once your account is funded, you can take a loan, like we mentioned, and it is a loan. Don't forget that. And let's talk about what happens if you don't pay that loan back. Okay. Now, I know people that don't pay it back. I'll just be frank with you. They don't, because they're using it. They're young and they're using it for these methods. Okay. But they know the concept. They're using it, and they rather funnel it through there. You continually getting dividends. If the insurance company gets dividends at the end of the year, they're giving it back to you, and you steady growing. Your cash is continually to grow. Okay. So being your own banker really means no restraints, which is going to give you flexibility when you want to purchase. Okay. So no credit check, no cosigner, no declines, lower interest rate possibly. You're going to gain dividends. Okay. And again, we know that those are not guaranteed, but in a whole life insurance policy, there is guarantees. And if you have a life insurance policy, a whole life, you look at your policy. You have a guaranteed side and you have a non-guaranteed side. So there are guarantees in a whole life insurance policy. Tax-free when you make a loan. Okay, and your cash grows. So again, you think about it, when you withdraw that money out of your savings account, everything stops. Those pennies that they give you, stop. Okay. Okay. So what you can do with the cash, whatever you like, keep it moving. That's what I say. Keep the money moving. Okay. One is I do investing in my properties this way. You know, and again, I do just like a bank does, you know, so we set it up and we pay it back. Okay. So another thing that you can do, you can become the investor or giving out loans. You know, I know some that does that. They actually loan the money for the property. Another way to keep the money moving. Okay, so I have a client and a friend. She has a lot of properties, apartments at the university here in the city over. And she told me when I was talking to her about this, she told me that this is how she has funded a lot of her loans, by borrowing from others who get the money from their life insurance policy. So they become the banker, okay, and they loan the money. That's another way. All right. So the options are limited, but the main thing is getting, you know, if you think this is not crazy, you know, I would say get in a family bank. Get in a family bank, use it for several things, and you know, instead of going to the traditional bank to get all of our loans, okay? And, you know, the point is, again, keeping the money in the house. That's what we want, as much as we can in the house, okay? So, so we talked about 13 years old is that starting savings account that most people think about, or the families think about. But how about 15 days old? 15 days old is when you can actually insure the life of a child. 15 days old. So how many years do they have over some of the others? Opportunity, 13 years. So while we're thinking about starting a child's savings account at 13, you can start them a life insurance with this concept. With this concept. And at age 13, they will be fine. They'll be buying their first investment property. If we're teaching them what we're all learning from one another and what we already know, just what we're talking about every Monday night. Okay, so they'll be already set. So this is a gift that keeps on giving. Okay. And not only that, you know, I think at age 13, which is what most say is common, I think it has puts us behind the ball. It puts us behind the 8 ball. Okay. Because, you know, that's 13 is not the first time that we put $1 in a child's hand. Okay. Or a quarter. It's much sooner than that. So if we start showing them, teaching them the different concept on what do you do with this? You know, it's just so much we can get into that. But what do you do with this $1? And not wait until 13 to start your first savings account or the piggy bank. Okay. So the advantages of banking on yourself, you know, one of the most is obvious. That is securing a permanent life insurance policy, okay, so that you can leave a legacy for your family. And we do know that this money, when the beneficiaries, now we're talking about after everything, and when that day does come, this is going to be tax-free money. I don't care if it is a $2 million policy. It's going to be tax-free money to your family. This is another way of leaving a legacy, leaving wealth to the family. Okay. I mentioned earlier, it can be used as a retirement. You know, and what other vehicles do you know right off that you can treat like this? And if you take a loan from it, you're not taxed. If you take a loan from your 401k, if you have one, you're going to be taxed on that. Okay, so this is just these are some of the things that the wealthy do. You know, this protects you from lawsuits. Well, it doesn't protect you from lawsuits, but it's protected. Your life insurance, the cash value, is protected in most states. You know, if you have a creditor, they can't, you know, attach to your whole life policy. So I do believe this is another reason why some of the wealthiest does this kind of stuff. You know, I wouldn't say they're funneling money, but they are putting money away. But then they're using it because they know I can't just put it there, or I don't just want to put it there. I want to actually use it. And what are you going to use it for? Okay. And again, it protects us from the volatile of the market, you know, in your insurance, so that you can retain, you know, the wealth and retain your cash. So do we have any questions yet? I think I was just in time. You popped up.
Yeah, this is Steve Jones. I want to thank you for giving that awesome presentation. It was just wonderful. I would like to let you know that I'm an example of the bank on yourself concept by Mr. Nash, who passed on recently. But it's an awesome example. I have had my policy now probably for I don't know, about 3 or 4 years. And I do like the cash value that you build up. But the main thing I like is that when I get ready to go use it, I don't have to ask anybody for anything. I don't have to go qualify for no bank. I don't have to do anything. I sit there and put a little thing in and say, I want X, Y, and Z of dollars. And within 7 days, is they send me a check or it's in my account.
Right.
It is just that easy.
Mm-hmm.
And I
awesome. That's Mr. Jones.
Yeah, as a matter of fact, I've said many times before, in 2019, I bought 7 houses using that particular method. So it does work.
Wow, that's awesome. That is awesome. So we have a testimony there.
I have a question.
Mm-hmm.
This is Chantrell. I just brought 2 policies, one for my 7-year-old, one for my 19-year-old, from Colombian Life. I'm not quite sure that I made the best decision, but I'm reading a page, I'm looking at it now, it says accelerated death benefit rider. You said I don't understand the concept of how do you add money to the policy? How do you increase the value of the policy, like monthly or quarterly? And there's a statement I want to read to you. It says, if an accelerated benefit is paid, a lien will be applied to the policy death benefit. And this is will be applied to death benefit and surrender value. Receipt of accelerated benefits from this rider may be taxable. Therefore, we recommend that you contact your personal tax advisor when making decisions about electing to receive and use benefits from this rider. I'm not, initially, I wasn't quite sure that this was the best way insurance policy. What do you think?
Well,
and
accelerated.
I am interested.
Accelerated benefit, that's going to be in your policy, which is a good living benefit. Okay. So if you were to receive a portion of your life insurance policy because you have been given a life expectancy of 12 months or less. Okay. This is it is while you're living, but that's what it's
anticipation of you're about to die sooner than expected and you're still living. You want to make a decision to pull it out to, use it while you're still here. So I am interested in I told Terrence about my son. he has autism, but he's high functioning. He's going to horticulture school because I want him to get into farming. All right. And I was trying to figure out a way to save money over the course of his college days, the next 4 years or so. And I set up a savings. But, you know, in order to help fund his farming business, I'm thinking this might be an option.
Yes.
So that's why I was asking you, should I get with my insurance broker and ask her, how can I increase the value of, like, keep adding to it? Because I'm not quite sure how that works.
Well, first of all, it needs to start from the beginning of the policy. You know, it needs to be structured that way. It needs to be designed that way. So, you know, you're going to get this when, first of all, you're dealing with an agent that uses the concept, understands it, and can design it. Okay, so that's the main thing. Now, she or he may have never heard of this and might not know exactly what to do. But what you do is, if this, I don't want to get too far into the policy because it's just so it's a lot. But we start out. I'll give you an example. Say your base amount of insurance is $50,000 of whole life insurance.
And that's what
yes, $50,000. Okay, so you have a $50,000 life insurance policy. It's going to gain cash anyway because that's what a whole life does. But you're going to have to open the window, and when I say open the window, you do that with certain riders that's going to allow you to add more insurance. Okay, because you can only it only works by adding more insurance. So you have your base, which is your whole life to age 100 or 121. Okay, but over here on the right hand side, you want this concept. So how do I make it work? You have to buy more insurance. Okay, so that you can open it up. And when you open it up, that's going to give you a window, because over here on the left, the 50,000 is going to gain anyway. It may take it about 4, 5, 6 years before you start seeing the cash, and it's going to be low. So if you were to look at your cash value in 3rd, 4th, 5th year, you probably see $100, $125. But over here, if you're able to open that window up and put $10,000 in there in the first year, you're going to have at least 95% of that available in the first year. So what it does, it speeds it up. It speeds up that cash, but it has to be designed correctly.
Okay, so it does say if this policy is unsatisfactory, the owner may return it within 30 days after receiving it.
You do have that look.
So I have an opening to make a change, I guess, right now, because it's only been about 2 weeks, I guess.
Well, if you open it up for more changes, you got to prove for what you applied for.
Okay, yeah.
So if we want to increase it, because now we're asking for more coverage, and you probably have to go back through underwriting or the child.
All right, good enough. Thank you.
Now, I got one thing to add on that. Now, with that, one thing she need to make sure is the company is a mutual company and not a
She does. Correct? And that's Colombian. Who is that?
Colombian Life.
Oh.
She's taking a note.
So make sure it's a mutual company,
yes.
right?
Yes, that's one of the things that it's got to be a mutual company, because a mutual company is a partnership. It needs to be a mutual
company.
And they pay you first. Take notes.
Yeah, because your stockholder companies, they pay everything else, take care of their bills and everything else, and then they give you what's divided up to their policyholders.
Yeah, they like the bank.
They're like the bank, right?
Okay. So
where are you, Chantrell?
I live in Prairieville, Louisiana, next to Baton Rouge, Louisiana.
Okay. Well, just to let you know, I'm licensed there in Louisiana.
I do want to talk to you offline about the trucking business, because my fiance, we brought our first truck. We want to buy a second, and I heard you have truckers. So
I have truckers that I insure their trucks, and then I show them this concept. So I said, so the next time you want to buy your next truck, you're going to be ready. So we're not going to the bank. You're going to go to your bank. That's what I teach you.
Got it. Okay.
You don't mind me sharing your number with her?
Sure,
I don't. You can.
Well, I got you, Chantrell. I'll get you that.
Okay. All right.
Go ahead, Ivory.
All right, so I have the question. When you say open the window, what do you mean by that? I get what you're saying, have your base, and I put the 50,000 just so I can have, just so I can see it, because I'm a visual learner. So I got the 50,000. When you say open the windows, are you speaking of the riders?
I'm talking of more insurance. So over here on the right-hand side, you have 50 over here. It's going to do what it's doing. Or what it's designed to do. But over here, you may add another 100,000 term rider that's going to open that window, so that along with your paid up additions, checked off, and when they design it, and it's going to allow you to put more in, because on your traditional whole life, you can't put extra money in there. It has to be a way in order to do that. And the only way is to purchase more insurance. So you can get $1 million of whole life insurance on a traditional whole life and not be able to do no more growth than what it's going to do.
Okay. So,
but yeah.
So you have your 50 base, and then your 100K, I'm just going to put it out there just to give it a number. 100K, but that's a term policy, not a whole policy?
It's a term rider.
Term rider. So
it's a term rider.
I'm gonna put a kid to rider, because and maybe I'm wrong. When I think about a rider, I'm thinking about my dependent. Yep. Am I thinking correctly?
Okay. Well, a rider is one and the same. It's just this type of rider, because it's going to eventually fall off. But you want to open it up with more coverage in order to
more coverage than my base.
Than your base, in order to overfund.
To pull from it. That's what you mean?
Yeah.
You're overfunding because you're going over what your base is.
What your base, right.
Right. So you want to go over what your base is, but when you pull out, and I'm not talking about pull out like today or tomorrow, but when you pull out, when you say that it's 9, you was like, I think you said you can pull out about 95%.
No, what I said was what would be available.
Available, right.
Available. So if you're overfunding your life insurance by $10,000 per month. So what we're doing, we're no longer putting all of it in the savings account. We're going to put it over here. And if that total comes to 10,000 or whatever the amount is that you typically save every year, you will have access to that cash. And it's
without penalty.
Clear, the cash is going to be available.
Okay.
So you deposited it over there.
Okay. So the only difference is and I guess I'm a little confused, because I'm confused, but then again, I'm not. The only difference between the savings account and this insurance policy is that even when I take the money out, it's still going to grow, opposed to the savings account. I'm not getting any percentage of growth if I pull from it. If I withdraw.
That's not the only thing. That is one of them. But the other thing is, look at your savings account and see what you got on it last year. And you have some insurance companies that give 4% interest.
Got it. Okay.
Yeah. And not to mention, if they are paying dividends, or if they've done well enough through that year that they're going to pay dividends, I mean, some of them paid 6.2 in dividends last year in 2020 for 21.
Okay.
So, so yeah, so that, and you having control of your money. That's one of the main things.
Okay. Thank you.
You're welcome.
Go
Somebody
ahead.
said your savings account don't give you anything. It doesn't.
Go ahead, Miss Priscilla.
Okay, thank you. So Cynthia, I have two questions. The first question is, does the money that you're putting in your insurance policy work somewhat like an investment account, whereas the insurance company invests the money in stocks or mutual funds, and so you are getting a percentage paid back on top of the money that you have in there? Because you just mentioned like they may pay 4 to 6%, or they pay 6% in 2020. Is it basically the same concept as if you have money in an investment account and then you're making a 5%, 8%, 10% return on your money based on whatever they're investing it in?
Well, first of all, is and you didn't say this, but I'm gonna make sure we understand that life insurance is not an investment.
Right.
Okay. But whatever the insurance company does with the money, again, they're keeping it moving. Okay. So whatever they have done throughout the year or years, where they are investing their money, just like the banks invest our money, wherever, and in return, this is what we're getting. So it could be, I mean, that is definitely a strategy, because even though we're putting X amount extra into our life insurance policy, it has to be moving in order for them to give us a return. So whatever they are investing in or growing their money, in return, we're getting a return.
Is there any way for us to predict what that return would be for that particular year or quarter?
You can't. If you're dealing with a company, you may ask them what's their history, what it looks like. And also, who was that? Chantrell, if you would do this, when you look at your policy, and this is for the other young lady, just to answer that question, whenever you do an illustration, it's going to project. So again, you have your non-guaranteed side and you have your guaranteed side, or versus guaranteed over here, non-guaranteed over here. So it's already projecting out to you as what things are today. So, but we can't. But we can tell you this, there is a guarantee, and that's on your guaranteed side.
Okay. The second question was, when you take a loan from yourself in this particular type of policy and you don't pay it back, so what happens in that scenario? Do you really have an option to not pay it back with no penalties?
Okay, great question. To answer that is this. Let's go back. When you do take a loan out, the loan is coming from the insurance company, really, okay? But you have used your life insurance as collateral.
Okay.
So if you do not pay that loan back, remember, a loan has interest. When you pass away, or when a person passes away, their and that policy is still in force, obviously, the benefit is going to be less that amount because it was a loan.
Okay.
Okay. And what was the other part of that question?
I was trying to see if that's penalty free.
Oh, okay. All righty. But some do, some don't, and don't pay it back. And if they don't pay it back and there's nothing there feeding the policy or keeping it going, unless you're just making your minimum premium every month, you know, I mean, you can or cannot pay it back. It just depends on how you want to treat your bank.
Okay. So if you don't pay that back, then if you
don't pay it back, it's going to be minus that amount at when the death benefit is is paid. It's
You lose your options to be able to pull more money.
right because you're not recycling.
Okay. Got it. Thank you.
Mr. Jones, your hand still up? All right. So a lot of key points tonight, right? I'm just gonna recap a couple things, and you can add on or take away or correct. So bottom line is, this is a way for you to be your own bank. As you develop to be your own bank, you probably gonna have a whole life policy, and you're gonna add some additional riders. The whole life policy is gonna be your base policy, and your additional riders is gonna be more money you're putting into the account that's gonna continue to grow.
That allows you.
That allows you to grow. You have a 7-year span where the growth pattern is pretty much there. So if you do it, you need it. You can't just do it in like 2 years, right? Unless you dump a lot of money over there.
You can do it. You can do it. But I'm gonna tell you about that 7-year span.
Okay.
The 7-year span really shows the IRS that you're not using it for an investment. It's almost like a test time. Even though you could be taken out, hey, after the policy is issued, 30 days. You can borrow from it. But that's what they call the test time, which you can definitely go beyond the 7 years. But yeah, that's your test time.
Cool. All right. And the benefits is, you do know, like you said, as well, that's a note that on the IRS looking at your account to make sure it's not just an investment account. The health, if you do it with a bank, if you have health issues, I'm just recapping some things you said. If you have health issues, you can if you have kids on there as a rider, you can do it in their name and take the loan out in their name. You can use this for operating businesses, starting your business, or saving your business. Let's say you already got a business in place, COVID-19 hit, people not coming in and stuff going wrong. Hey, you don't want to save your business, you don't want to go out of business. It's a good way to pull your money in and save it. Okay. So you got a lot of good notes. I try to take as many notes as possible. Continue to give interest. So if you do borrow against your account, you continue to get interest. If you have a bank and you borrow against, you take money out the bank, then you getting less money, you're getting less interest on your money, and they're only giving like 0.1%. If you do go for a loan at a bank, you got to worry about cosigning, credit checks. You can get denied. But by doing this process, you don't have to go through all the headaches, the strenuous, or the applying for it, and it's your money, and you've been giving them money. You ain't got to worry about all that by doing this process. I love the part that you talk about currency. You use the word currency instead of money. Guys, that's one thing that I like to definitely try and express. If you think about currency, when you look at waters have currents. It's always moving. If you put my little glass of water right here, I don't know if you can see it, but it still moves. Water moves in steady places, and it moves in flowing places, and then it goes to the lowest spots all the time, right? So your money should continue to move. If you parking it in a bank, it's not continuing to move, right? You got to stand still. So you don't ever want to do that, right? You want your money to go through a bank to keep on moving, or you want your money to go through an entity and keep on moving. Another thing you said about savings, and just throwing another gem out there, I like to tell folks and practice this: you only need to save 3 months of your salary. 3 months. That's just my practice. I ain't telling you how to run your life. But my thing about it is, when is enough? You can't save forever. You don't want to save every dime.
That's right.
And my logic behind the 3 months of saving your salary is, if I lose my job this month, I got 2 months to find a job. I get out there and find me another job. I found a job in 1 month. That's the second month. I got 2 weeks to get in their pay system. The third month, a check should be coming back in. I can live off those 3 checks while I'm comfortable finding a new job. That's my logic. I hope it works for you, right? Anything over 3 months, if you save 3 months of your salary up, you need to be investing. That need to be another savings account. And that savings account need to be the investment account. So one account that I just told you about, the 3 months of salary, that's your emergency account. Oh crap, something just happened. The hot water tank went out. The HVAC went out. Oh, the car broke down. That's the money you pull from that, right? That's your emergency saving account. Your additional saving account is your investment saving account. That's your currency growing account. That's the money that say, go out there and get more money. Go find prisoners, bring them back. I'm in the military, so you know what? I need my money to go find the POWs, prisoner of wars, and bring them back, and let's get some intel. Talk about what you did over there, right? Sorry, I'm getting off that soapbox. Let me recap. So kids can be insured, babies, infants can be insured after 15 days, right? That 15 days give you a head start on that 13-year-old that you're starting his insurance policy on, right? So that's another good hitter that you put out there. You can use this money in a long run for retirement, buy cars for your kids, invest with others, buy investments, lend out to make more money on your money. The money that you have in this account is protected, legally protected in most states. We gotta put that disclaimer out there. In most states, because some states got some funky laws. But if you go and have a car wreck and somebody passed and your insurance policy don't cover it, then they can't say, oh, I'm coming out your insurance policy, your personal life insurance policy, your whole life insurance policy to pay that money. If you have a house in your personal name and you drive and you have a car wreck and people pass, guess what? It's in your personal name. Everything over that cost can go to your person. They can take your house from you. Now, can they take the physical house from you? No, they probably can do this. If you ain't got no loan on that house, then they can take all the equity. If you have a loan on there, take all the equity. If you don't have a loan on there, then they can take the house. They can say, you need to sell that house and give me the rest of this money so I can pay my doctor bills. Right? They're just food for thought. I'm not an insurance. Yes, I am an insurance sale.
One thing that I like about mine, maybe I heard this, that I'm with a different company that's what she's with. One of the things I like about mine is that at the end of the year, they pay me dividends and interest. Exactly. And I like both. And I'm telling you, each year, the dividends go up and the interest go up. Now, mine is set to be paid off in about 8 years, okay? But I told the guys, listen, I'm not paying mine off in 8 years. I'm continuing to put money in there because the more money you put in there, the more money you have. Now, at age 70, they said they would give me like a $300 or $400 check for 20 years. I know about $20,000 a year until age 90. I don't want that. They can keep that money because that money can be used for something else. But now that my policy go up to $5 million, meaning I can put it up to $5 million in that particular policy, then something happened to me, you transfer it over to your family scot-free. And if you put that as a trust, what I mean, put the trust as the beneficiary of it, you own the policy, but the trust is the beneficiary, then the money goes slides right into the trust. And you can mandate that money in your death. So while you in the grave, you can write up what you want in your trust. You can tell them, hey, you got to go to school. You got to do this. You have to do this before you get this money. You're going to get this amount at age 25, that amount at age 35. And that way, you want to leave them some, but you don't want to leave them where they can spend it all at one particular time frame. So you have to order their steps because free money is free money. When you do it, sweat equity for it, they spend it much faster.
You said a couple good things that made some more thoughts come up. With I guess as annuity, right? After you pass and they keep the money in the trust and they're not giving the money right out, is that more of annuity or not?
If they are.
So like he just brought the point that I pass and I can say I want to keep the money and I want y'all to pay the kids, at age 25 and 23 or whatever. That's more like annuity then, right?
Right. Yeah.
It's been a while. So that money continue to make interest. Why is with the bank, right? Or why with the insurance company?
Yes.
Yeah, and like Mr. Jones was saying with his policy, when he at age 70, and this is and like I said, this is going to depend on what your reasoning is for doing this. If some people set it for retirement as a retirement vehicle along with So he just said it, that at 70, he can start taking out X amount every year to age 90. So this is how powerful the whole life insurance policy, a perfectly designed one, and I'm so excited that he has one that he can, you know.
Who does he have his policy with?
Prove.
No.
I'm saying we have additional proof that it works.
Yes.
Yeah.
Who your policy with, sir?
Mine is with Lafayette Life. My understanding, I did research on this before I got it, and I didn't realize that the thing was true. Nancy Yellen wrote a book that she got it from Nelson Nash, the concept. She wrote the book, and I can't think of the name of the book right now. Oh, Bank on Yourself is the name of the book. I think of it. Yeah, and I got the book, and I looked at the book, started reading it, and then I went and got some Nelson Nash stuff. I got some of the books and some stuff that he got. Started doing some YouTube and on him. And it took me a whole year to get off in there because I really didn't understand it. But once I got off in there and found out, like a couple months later, you can borrow money like crazy. You put money in, and you can take money right out. And as soon as
right out, yeah.
Bank, you can call them and say, hey, I want. Mine is 85% of what you get in them, and you can take it right out and use it what you want to use it for. Now, like I said, it is more like I'm banking myself, I'm paying myself back every month, paying that loan back every month, and they don't care if you pay the loan back or not. And you tell you the truth about it, first of all, they got the money already, okay, as collateral. Okay, your money stays in the bank. I mean, in your own personal bank and earn interest in your personal bank, like you never had. Even if you take your money out of the personal bank, you still earn interest on the money like you never taken it out. And that's what really sold me. You mean to tell me I can take $50,000 out, $100,000, whatever the amount of money is, and they still gonna pay me dividends and interest on that $100,000 like it was still in the bank? I'm sold. I can take the money out, use it for what you want to use it with. Of course, if you get an asset, to buy some type of asset, the income producing asset, and then they have the income producing asset, pay the money back itself. And then guess what? You got the asset, you have the money, and and everything is just wonderful. Just wonderful.
What now? You got the name on Chantrell?
Lafayette? Yes, I just looked it
up.
The
Lafayette Life Insurance Company.
Okay,
my guy's cool. I'm in Dallas, so my guy's he's in El Paso. That's who they sent me to. I can give you his number.
I got ripped off of my insurance policy.
What did you say, Chantrell?
I feel like I got ripped off with my insurance policy.
No, don't think that, because it only comes when you get it. I mean, or understand it. If you would have known this, you would have not. So,
but there was something funny about it from the beginning. I had a funny feeling.
But not to say that there's anything wrong with your policy. I mean, it may not be the best design for you now that you know that. So, many times, again, I said I've been in the business for 15 years. Do you know what I wish I knew 15 years ago? Okay, but I really took that back when I said it, when I learned this concept, and I said, well, who knows? I probably wasn't ready then. Whatever, take it for what it is. But you do have an opportunity, and I can help you.
That's what I was just about to ask you, Cynthia. So can you tell us what company you're with, and if we do want to set up one of these policies, we can just call you and work with you on it?
Well, it depends on where are you at, Priscilla?
I'm in Louisiana, Shreveport.
Oh, okay. All right. So let me go ahead and plug this in. I am licensed in Georgia, South Carolina, North Carolina, Texas, Alabama, Louisiana, and Virginia.
You ain't playing no games, are you?
No.
Wow! Congratulations.
Yeah. So that's those are.
What number you would like to go in? What number you want to put in the chat box? Because what number you want to put in the chat box?
Well, you want me to put it in there? Or are you gonna put it in there?
I can put it in there.
Okay. Put it in there for me.
Your cell number, go ahead and put your cell.
I'll put the, that'll be fine.
Give me your office number.
912
912
564
564
2425.
2425. All right. We do have a question about does the rider make equals amendments?
I don't quite get that one.
Mr. Tremaine, you want to explain that a little bit clearer?
Oh yeah, she was trying to explain the definition of the rider to, I forget who asked the question, but so I was just trying to say, like, is like when you amend a contract, you add an amendment to a contract, so it's like a rider, the same concept of like adding an amendment to a contract.
Mm-hmm.
Is there more amendment or is there addendum? Which one it is?
Well, I say.
That's the next question. That's the next statement.
Yeah.
I mean, it's kind of the same concept, but
Let me do the same thing. You're attaching something that's going to ride for a certain, just like children. You know, we all familiar with a child's rider. Okay, so that child rider is going to last to age 25 or marriage, whichever one comes first in some policies, and then you're going to fall off. So a rider like this would work the same. It's just how it's designed and how the length of time that you're going to have it on there.
Okay, no, this is awesome. I mean, I like the fact also that, you know, you just broke it down to Chantrell about how, you know, hey, you know, sometimes the timing ain't right, and we don't know what we don't know, right? We don't know what we don't know, and
That's it.
And everything's given to you in due time. And right now is the time for everybody been on this call to be exposed to this, that may know about it or may didn't know about it, or may just learn something new about it. I appreciate it. You know, bottom line is every nothing's made equally, right? No credit card is equal to any other credit cards. No bank is equal to any other bank. No lawyer, all this stuff, accountants and insurance is the same way. It's not equal. You have when you talk to people, you can't talk real estate with a dang criminal lawyer. You got to talk to a real estate lawyer, right? With this insurance right here that she's giving you, she's an investor-friendly insurance company that teaches you more than just, I want your money to buy insurance and cover your family in case of emergency, right? Untimely death, right? So she got a company that says, I want more for the people I work with. And now I didn't know about the stocks and mutual. I didn't get that part of it, or I didn't know something about it, but I forgot. But it's an awesome deal when I can see real insurance being more than just, oh, this is a case of emergency, right? You can use the money now. So that's crucial. That's crucial. Thank you so much for this information. Thank you for providing another way that people don't have an excuse to start investing into their dreams, their goals, and really live their livelihood. I can't stand that people say their job is their livelihood. They work for somebody else in their livelihood. I love when people on these calls like this that said that what I'm doing, I want to bet on me. I want to invest in me. My livelihood is what I'm doing, not what I'm doing for someone else's benefit, right? If you die today tomorrow, that job gonna continue. But if you own your own business and you die today tomorrow, your job, that job ain't gonna never be the same. It ends the way it is because you began it. You know, now somebody may carry on another path, but that job would never be the same because you are the difference, you the thing. So I appreciate you giving everybody this opportunity to see another avenue to fund their deepest dreams, their desires, and what God gave them when they sleep, what they thought about when they was a kid, what they wanted in life, right? So this is another way to fund that by starting your own business, by starting your own investments, and by having the opportunity to grow. Man, this is so awesome. It's been a great presentation. We
appreciate
appreciate
I add one thing before you stop there, LT. This same policy here is for individuals, but you have a same policy for a business too. It's called business-owned life insurance. and I think it's called BOLOs. And I did some research on that. And this is how some of these companies come up with when they get desperate and they're about to go under, and you find out they come up with several $1 billion. What they do, like Home Depot have them, Lowe's have them, and they take their money and they buy insurance like $1 million policies, but they'll be able to hide a lot of that money in all the earnings into these policies and add and get that 4 or 5% interest, up to 8% interest, whatever they got in there. And then that money is non-taxable, so that business will continue to grow. You can do that as well. I don't know much about the business side of the house. I know a little bit more about the personal side because I'm in the personal side, but I do know, and I have read a book on that a lot of the corporate companies are doing that.
Right, and that's bank on life insurance, BOLI, and the businesses, they do use it. The banks use the same thing, and what they do, they put the insurance on the key people, okay, and they fund it, and they pay their benefits through it, so we can do the same thing in our business, and so yeah.
Yeah, and now that's great, and that's a whole nother story right there. When everybody start getting these businesses for real to help them out, I'll take that as a due out for a future class just about business insurance, that partnership insurance. If you got partnered with somebody, you can put insurance on each other, so that if something happened to one of them, they buy them out the business, right?
Exactly.
It's so many ways to cover yourself, guys. And look, I think we got one thing about the 95%. Can you only borrow what you add, or it's up to 95% of the policy amount?
No, you can only borrow what is available. Okay, what is available in your policy. So whatever cash is there. So again, rather it's 85 to 90% available. If you do that X amount, if it's 5,000 that you've done, and you may find that only 45 or 4,700 is available. Again, the cost of the insurance and the cost of the riders, that's where you see that less amount. But
I do have a question. Since my son has autism, he gets $700 something a month, right? If I put 500, you can only have so much money, I guess, in the bank with Social Security. So, but if I put it in insurance, that's a way to kind of keep it from them until I'm ready for him to stop Social Security and use it for, his farming.
Right. Yeah.
I'm thinking.
Yeah. Great. I mean, we're just talking about, I would say, small scale, ways, but this is what the big businesses do on a bigger scale, where they put that money over into something like this and reuse it. So yeah.
Initially, I was going to put it on my name and make him the beneficiary if something happens to me, into a savings account to kind of hide the money. But, this way I'm thinking I can just, kind of do it this way and he'll be okay.
So it's two things I would say to that. One, you have to get with her offline to find out what's your cap, before the IRS say it's an investment account first. So we need to know that.
Right.
And then two, another thing you probably want to do is open up a child's IRA for the other part that's over that amount. A Roth IRA, I want to say, or you have to get with a tax person and, talk more about that. I don't want to put that information out there too bad, but at the end of the day, that is true. Somebody said, hey, look on this call, try not to say your actual numbers of how much money, because we on YouTube and people hearing this. But the other part of that is you do have IRAs for that. I don't know how it actually works, but I'd say two things, Chantrell. One, once you get, I think your husband's your fiance starting a trucking business, you can pay your child money up to $12,000 tax free, right? That's one way you can kind of help with keeping your expenses down and reinvesting to your kids and keeping the money going in your family. And I want to say something like 12.5. I want to say, I don't know. You have to give it some tax person to make sure we got the right numbers. You open it, they already have a business account. You open up an account, you pay them from your business account and do that way. And over time, up to 12K, right? So whatever money you have left over there after the insurance policy, that may what you want to do. Then you can do an IRA, and you put money in there up to $6,000 a year for a Roth IRA. And that's another way that you can actually put money in another growing account and borrow against at a low interest rate and still keep your money flowing and it's supposed to keep rolling. That's my 2 cents on that one.
And let me add, you don't have to have just one policy. Okay. All right.
What's the name of your company?
Mm-hmm.
What's the name of your insurance company again?
Mine? Mm-hmm. My agency? Mm-hmm. Cynthia Scott Insurance Agency.
Oh, look at it. Her name, y'all. Can't get it wrong. Can't get it wrong. Everybody. Definitely take advantage of the number 912-564-2425. That's correct?
Correct.
All right, I'm making sure I ain't got no dyslexia going on over here. You know what I'm saying? Write down one number and type something else. I got fat fingers. I'm sorry. I got a small computer. But guys, make sure you call Miss Cynthia. She took out the time to give you this information. Before going to anybody else, give her opportunity to learn from her and get from her. And then after you learn from her and get from her, then you can go forward and, do your research with another company, but give her that benefit to get your service and earn your business. I think she already earned your business by providing you this information. But I do have a rule that, hey, sometimes you want to, check around and make sure that, hey, this company ain't no different than this company. But I think she got on this call to help you out. She brought wealth, she brought knowledge, she brought love, she brought the true meaning of how you take care of your kids. That's the most important part. I mean, we are already grown. We already got our bad habits, but she asked you to teach your kids at a young age. Let's start saving it now. Let's start making business decisions now. Let's understand that if you want a car at 13 years old, if you want a car in a couple of years, then, hey, look, we're going to put this money over here and we're going to let this money grow. And then you'll buy the car cash. Not buying a car with no finance and giving money away again. Buy a car cash with your cash and you pay yourself back if that's what you decide to do, because the insurance money already there, right? And then until it's gone, to deplete or what have you. But it's more to it. Like she said, it's not as easy as it sounds. It's a couple more skills with it. But you have the basic information that enlighten you to be better, to do more, and be more. Mr. Chantrell, you got another question? Your hand's still up.
I'm sorry. Let me put it down.
No worries. Brother Jones, Mr. Jones, sir, you got another question or you got another statement or comment? You probably stepped away and over there helping the man out.
No, I do not. My hand's still up. I don't know how to take it down. So let me see. Oh, that I got it.
Look at you. Hey, you gotta show me how to put a black hand up, man. I seen that. I'm like, he got a black hand. I gotta figure out how to put a black hand up. Look, thank you so much, Cynthia. I'm gonna shut up and let you have the closing remarks. Anybody else have any questions before Miss Cynthia do her closing remarks? Anybody have any more questions? Is right going now. I know you got a number, 912-564-2425. Please give her a call. Please find out more. Please support her since she's supporting us by providing this information to you. All right. Miss Cynthia, I'm going to go to mute and I'm going to go to video off and I'm going to let you close us out.
Okay. All righty. Well, thank you again. And thanks everyone for your attentiveness tonight. And, as you're thinking about this, and I'll speak to those that already may have some things in place, it's perfectly fine. Okay. Again, you don't know what you don't know, but it's only until you learn better is when you do better or do something different. So one thing that I want to leave with you is this. When I present this to most, they always wish they would have known this 20 years. They may be 50 or 60 years old. But you know, not all the time we have time on our hand, because time is, we all know it, is money. So I would say the sooner, if you're interested in something like this, the sooner you get more information, do like William said, educate yourself on the product. You know, I don't mind illustrating for you, so that you can have a better understanding of what you're getting into. So I just thank everyone for being attentive and giving me the opportunity. Thank you.
All right, y'all. Good night. Y'all take care, and thank you so much, Cynthia. We'll talk.
You're
again.
welcome.
You know, I forgot to record, right? But it's on YouTube.
Thank you.
You're welcome.
Thank you. Awesome presentation.
Great, Miss. Thank you, Mr. Jones.